Hello, Oracles. Well, we've got another red day in the market, but we kind of anticipated this. We've got the FOMC meeting on Wednesday, and we just kind of anticipated uncertainty leading up to it was going to create some uncertainty in the market, volatility, and of course, red. And we did get some news over the weekend with China having another outbreak of the Deltacron variant, I think it is over there. So they're shutting down the Recession center, which is the major production center of China for a lot of things, including Tesla. So a little bit of concern there, questions and talks about maybe nuclear stuff. The Russia-Ukraine situation still going on. So still some uncertainty, had some ugly day in the market today. Again, totally expected. But now I had a thought that came through my mind, and that is, for those of you who are considering and thinking, because I know we've been in a lot of pain for a while, and thinking about selling, remind yourself of this. What is the absolute basic strategy for stocks and trading? Buy low and sell high. Well, ask yourself, are we high? Absolutely not. I mean, the Nasdaq just officially hit a bear market. So, we're looking at a bear market that's definitely not high. So why would you sell at a time when we're definitely not at a high point? And now, sure, is this the bottom? We don't know. We're not going to know, obviously, until we actually get out of it. So we may have more further pain to go. We may dip down more. But ask yourself, as far as we've come down, what are you actually going to gain? How much further down can we go? I mean, sure, maybe Tesla goes down to 500. It's a possibility. I don't think it's a realistic possibility, but it is a possibility. We have a lot of other major things that are going on. But I think at the place that we're at right now, whatever step down we're going to take, it's not going to be like a drastic drop. It'd be slow, and it would be based upon inflation, the war, data that we're getting on a weekly and monthly basis. So, it's one of those times where you can hold and dollar cost average, which is what we have been doing. Free up cash where you can, get some cash flow generation, and this way you have more money to invest in this market. We will turn around. It's going to turn around at some point over the next year, most likely, but we don't know when. So in the meantime, you've got to ask yourself that question. How much further do you think we can go down? Because if you think that selling now to be able to buy in lower later is going to work for you, that's up to you. You've got to do your own research on that. But, there's a good chance that after the FOMC meeting on Wednesday, we might recover a little bit. The Fed might just give us that clarity that we are looking for, that the market is looking for, and we might turn around. Of course, leading up until then, tomorrow could be an iffy day, maybe get a little bit of green, maybe flat, and I'm pretty sure we're going to be red on Wednesday morning leading up to that meeting. So we might actually get a good buying opportunity on Wednesday morning. Maybe tomorrow is a good time. If the Fed comes out on Wednesday and says that they're going to give us a 50 basis point rate hike, we might see a little bit more red. But if they say that they're going to give us just their 25 basis point rate hike that we are expecting, the markets might actually turn green because they're like, all right, the Fed has confirmed it's just going to be a 25 basis point rate hike, and we're going to buy back in a little bit now because we got the answer that we were looking for. Again, we don't know what's going to happen, but you have to remember that big money is what controls the market. Many retailers are out there. All of us are dealing with the market, doing our own thing. But unless all of the retailers get together collectively to do what happened with GameStop or AMC, we're not going to be able to move the market like big money does. And you have to remember that big money has more than enough money to live on. They don't have to worry about, expenses. Their inflation for them is just a game. Like, they don't have to worry about, oh man, now I can't afford gas, or I have to worry about groceries and budgeting. Big money doesn't worry about that. Big money doesn't care. Big money actually utilizes that and uses that in their favor to squeeze out retail buyers. So right now, that's what big money is doing, is they're pushing us down as low as we can go and testing to see who in the retail market is going to give up their shares. They want to try and push out as many people as possible, because as soon as they do that, they can then buy back in and bring the market up higher. And by the time retail catches on, there's a gap. And what ends up happening is, like, let's say we'll use Tesla for example. We're sitting around the 760 mark. Maybe big money says, oh, we're going to push it down as low as we can, and they push it down to 650. 650 is that magic number where big money's like, all right, now we're going to buy back in. and they buy back in. Comes back up to 700. By the time retail figures this out, retail buys in at 700. There's a $50 buffer that big money now has to play with as they can move the stock around, because even if the stock does fall down to 700, they're still winning where retail is now break even. So this is how big money influences and plays the market, and they just toy with us in retail. So that's why you've got to make your own decisions, do what you can with your own portfolio, and make that choice of, all right, how much further do I think we're going to go down? And if we are going to go down a lot further, do I sell and try to time the market, or am I just going to dollar cost average? The choice is up to you. My choice is I'm going to dollar cost average, as I have been, but I'm going to do it in little increments, because I think what's going to happen is, even with big money, they're going to kind of play it month to month and see, where's inflation at? Where are we going with the war? Where's the Fed going with their rate increases? All right, we're going to price things in and then play with it accordingly. So we may be in a month-to-month swing for the next few months based upon, the rates going up and the war and however big money wants to manipulate the market. So for me, I'm going to dollar cost average, and if I see that it seems like there's a push going back up and we're consistently going back up, I might buy a little bit more. Otherwise, for me, it's going to be more of buy as we're coming down and then hold as we're going up. I still do my daily investing, so I still invest in a bunch of stocks on a daily basis. But as far as adding more, I will be waiting as we go up, because you never know when we're just going to stop and come back down again, because that's what's been going on all year long. And today I did add a little bit to my portfolio. So while I've been sitting on about 7.5% cash, I added a little bit more Tesla to my portfolio. I added more SoFi, some NEO, Nvidia, Square. So again, they were just small dollar amounts, but I had the extra cash and I was seeing how much down and depressed we were. So I bought a little bit more in. So if we go red tomorrow and Wednesday, I'll buy a little bit more. And MULN had a nice little run for me, looking for a short squeeze on that one. So I was actually able to sell out half of it to make back the money that I invested plus profits. So now I'm basically playing with the market's money, which is nice, and I'll let it ride out and see if it can go any higher. Worst case is it completely crashes and goes to zero, and I still made a profit on it. So now I'm playing with the market's money, and that's nice to work with. So I'm still working on these little plays here and there to free up a little bit more cash. And so as the market continues to sell off, and as you are over here concerning yourself with, oh my gosh, it still keeps going down. Should I sell? What am I going to do? My portfolio, I'm down so much. I mean, heck, my portfolio is down like 17% right now, year to date. But it's like, ask yourself, is it worth selling now? Because don't forget, you don't actually take a loss until you sell. So are you willing to sell right now and take a loss, hoping that the market's going to come down further so that you can buy back in and make it back up? Because don't forget, you take that loss, you got to do the math on your own for your own portfolio. But if you take that loss, ask yourself, what price do you need to buy back in at in order to make up for that loss? Or is it worth just dollar cost averaging to bring your cost basis down, and then it's not going to take as much to bring it back up to go positive again? Questions only you can answer for yourself, but it's something you've got to take a look at your portfolio, take a step back and really look at, is it worth selling when the market is down? Don't forget, buy low, sell high, not buy high, sell low. Let me know your thoughts in the comments. What do you think the Fed is going to say on Wednesday? Do you think they're going to say any trigger words that might actually cause the market to collapse? Do you think that they're going to raise by 25 or 50 basis points? Let me know your thoughts. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.